We are live. Good evening, everybody. My name is Abimo Olayiwola. I'm a business lawyer and I'm the founder of Abiligo Barristers and Solicitors. And with me tonight is Mrs. Kikelomo Oyelere. She's an accountant, like you know, and she's a tax consultant. So she's here this evening to tell us about our tax obligations. You know, business owners and startup founders, they're always on my neck. Okay, it's not like I don't want to pay my taxes, but what are the necessary taxes that I have to pay? When should I pay? How do I even calculate what I'm supposed to pay? All those questions are going to be taken care of tonight. And if you are here and you know that your startup co-founder is not here present, you better send a message. Share this video now before she starts, because I'm going to bring her up now. Share this video now and let everybody know that we are live. And we are already talking about the different, tax obligations, how you can legally, reduce your taxes. You don't have to become a criminal just because you want to reduce your taxes. So I'm going to bring her up now and she will be discussing your tax obligations. Mrs. Kikelomo, good evening and welcome.
Hi.
Thank you for coming tonight. We do not take this for granted. And please, you have the floor.
All right. Good evening, everyone. I, Abimol Olayiwola. It's good to be here. Thank you for inviting me. And I want to apologize for starting by high schedule. And because of our time, I will move to my presentation. Yes, just as Abilega has said, we have issues with taxes. We have people talking about, especially the funders, startups. You see that people don't know what to pay. People are always faced with how do I deal with tax issues, especially when it comes to a payment, when it comes to how would I not go against the law, how would I not be fined, receive any penalties and all that. So tonight, the topic we have here is Tax Act for Funders to Save Money Legally. Tax Act for Funders to Save Money Legally. And I'll go into the presentation fully. So what do we have here? We have essential taxes. What you'll be gaining today from this webinar is about taxes that you are supposed to pay as startup or funders. Legal ways to minimize your tax burden, compliance requirements and deadlines, record keeping best practices, how to handle tax audits. So I'll be giving you hints on all these so that you'll be able to manage your taxes as funders, and your mind will be at peace, your mind will be at rest, because once you know you have done the right thing, you know that tax agency will not be after you. So I go into the presentation fully. What are the essential taxes for startup? You see here, before I go into that fully, I want you to know that taxes is based on law. So, and it also depends on your structure, the structure of your business. Are you a freelancer in terms of individual? Are you a business owner? Do you have a business name, or you have a company? All these matters in taxation. So this will determine what you are going to pay. It will determine the rate. It will determine how you are going to be assessed. So here we have for someone that the person is an individual. Let me just let me restrict it to funders, talking about people that have business. So people that have business, talking about, are you a business, you register with a business name or company. We have company income tax. So company income tax are meant to be paid by people that has company, while personal income tax are for people that has business. So we also have value added tax, is part of the taxes that are meant to be paid by funders. So, and this also depends on quite a number of things, which we will delve into in the course of this webinar. So then we have withholding tax, we have capital gain tax, we have stamp duty, we have development levy, then local government taxes. Yes, so all these taxes are taxes that in one way or the other you come across, but this depends on the structure of your business. I mean, what your business is all about. Did you register as a business name or as a company? Then agencies that also collect taxes. Yes, FIRS collect taxes. State Internal Revenue Service, where you reside, they collect taxes. Then we have local government authorities too. They also have what they collect based on tax laws. So for FIRS, looking at what I have here, FIRS collects company income tax. That means you are liable to pay FIRS company income tax if you have a company. PIT is collected by State Internal Revenue Service. So where you reside, because PIT is based on rule of residency. So it depends on where you reside. Value-added tax is also collected by FIRS. Withholding tax is collected by both. It depends on your business structure. If it's a business name, you are going to pay to states, but if it's a company, you are going to pay to Federal Inland Revenue Service. Then for CGT too, it depends on your business, on your company. If it's a company, you pay to FIRS. If it's a business, you pay to State Internal Revenue Service, and ditto to stamp duty too. But development levy goes to State Internal Revenue Service. Then from local government taxes, definitely you know that this is going to be paid to local government authority. Other local government taxes we have, I think we have like 21 taxes that are being collected by local government. But we see that most of these taxes are even going into extinction. You can imagine you are paying for sheep, you are paying for goats, you are paying for radio license and all that. So some of them are going into extinction already. So now, as startups, what can you do? Legal ways to minimize tax burdens. Legal ways to minimize tax burden. I want to, I don't know, I want to believe you are all hearing me. I want to believe that I'm on. So let me go ahead. So what are the legal ways to minimize your tax burdens as startup? You know, I've mentioned that these are the tax you are supposed to pay, either as a business owner or if you have a company that is the business you are managing, you register by company name and not business name. So all this determines what you are going to pay and who you are going to pay to. Then I want you to know something. What is key for every business owner? If you really want to comply and you don't want to go against the law, you want to be a tax compliant business owner and you don't want issues with tax authority, there is what we call tax planning. And it is key that regardless of how small or big your business is, because you are envisaging that you are going to grow, you need to take this really seriously. Tax planning, you know, just as people used to say, and that added that if you plan to, if you fail to plan, you may be planning to fail. So it is good that every founder should plan their taxes, and this starts with registration with CAC and tax authority. Now, when you are registering your company name with CAC, your business name with CAC, you need, before you do that, I want to believe that maybe we have people even on this platform presently that have not registered. It's an opportunity for you that you look at the advantages of either you are registering as a business name or company name. That is key. Then, before you even register with tax authority, the owner lie on you that you must register with CAC first. Your business must be registered. So you have to register with CAC and tax authority. Then the second one, when we talk about tax planning, is proper record keeping. This is also very key. In the course of this webinar too, I'll tell you records that you need to keep as a startup entrepreneur, even a freelancer. If you don't have a business, maybe you have not even registered you are just personally on individual basis, you are just still, you know, doing your own thing, you have not registered. So you need to start keeping proper records. We call it documentation. So when you have a good proper record keeping, you will be able to reduce, because it will help you. Because I also need to let you know that taxes are based on facts and laws. We need to all know these facts. And when we are talking about facts, we are talking about evidence. And evidence, part of evidence we are talking about are the records we are keeping, the books we are keeping, the evidence in terms of receipts and all that. We'll look into that in the course of this webinar. Then compliance with filing deadlines. We also, as a founder, as startups owner, we need to know deadlines for all tax payments. When do we file? When do we file? This is also key, because if you are not complying, there are penalties for this. So then, as startups, if you want to reduce your tax burden legally, you also need to consider leveraging tax incentives and reliefs. In tax laws, there are tax incentives, there are reliefs that are started, especially for small business. If your business is still small, there are reliefs for you. One of the reliefs is that if you register as a company and your business, your turnover in the year is not up to 25 million, then you are not liable to pay company income tax, but you must file. You are not liable to pay company income tax, but so there are incentives, there are reliefs in tax laws. We call it professionally, we call it loopholes. There are tax loopholes that, as entrepreneur, as founders, we can use to our whole advantage. So then, deductible and liable expenses. There are expenses, and that is why it is key that we keep records, because it is when you keep records that you will be able to claim these expenses, these allowable expenses. So deductible and liable expenses that we are talking about here, they are like expenses that you have incurred in the course of your business. They are allowed for tax purpose. You pay rent, maybe you fuel your generator, maybe all those expenses. You even transport, the expenses you have incurred in the ordinary course of your business, they are liable for tax purpose. Then there is something we also call pioneer status incentives. There are some industry sectors that are under the law that have opportunity for pioneer status. Pioneer status means like a tax holiday. You have holidays. You have periods that you be allowed not to pay. You will be free. You'll be exempted for paying taxes. So at least I know of there are sectors, like there are sectors in Greek that you can that can benefit from that. IT too. Most sectors in IT also can benefit. So you need to be aware of all these so that you know how you use it to your advantage. Then another incentives, or let me use loopholes, is structure your remuneration. I mean, as a startup, this will also help you. You structure your remuneration in such a way that, okay, from my business, am I going to be paying myself salary? So if you are paying yourself salary, in a way, it will help you because it will reduce your tax payments. Although this depends on how you operate this, which I would also mention. I'll also tell you more details on this in the course of this webinar. So when you structure your remuneration properly, you'll be able to enjoy relief from tax burden. Now, what are the records? I mentioned the other time that when we are planning, one of the things we should plan for is ensuring that we keep records. We have documents in place, properly filed, so that when it even comes to the issue of, we want to come and audit you, tax audit, you are at peace. You have peace that, I have all the evidence. Then even when you want to file your returns online, some of these records are required. They will ask you to upload them for tax exemption purpose, then as evidence. So here I have sales invoices. Now I would direct this to some funders that the way they are still operating, they don't issue invoice to their customers or clients. Please, let's try to do that, especially if your product or your service are vatable. It is good that you do that, because it is when you do that that you'll be able to charge VAT on that your cost or your price. It depends on how you use it. So it is when you have invoice that you'll be able to charge VAT. We have items that are vatable, we have items that are non-vatable based on value added tax act. So when you have sales invoice, and these invoices are to be properly kept, either manually or in terms of soft copies. You can have hard copy, you can have soft copies. Then purchase invoice and receipt. This is also very key. Even if you don't have anything, if you don't have sales invoice, funders, you need to have purchase invoices and receipt. Receipt of, oh, you bought a computer. Receipt of telecommunication, even as simple as data. If you are someone that you are always on internet, maybe your work is always based on subscribing and all that, you could get receipt for it so that you can claim it from your, you can use it to reduce your tax burden. So receipts, every receipt that are key to your business, ensure you keep those receipts. Then payroll and salary records. So on these, you also need, if you are founder that have people working with you already, that you have people that you pay salary, ensure that you document their payroll. Then another thing that is also key is bank statement. Bank statements. It is from bank statements that if you want to work on your taxes, tax payable, it will be very easy to determine what is my income, what are my expenses. And I will also use this opportunity to now say that for all founders that you use your personal account for your business, it is not advisable. When I will call it reckoning day, or the day of tax, for the day for the tax authorities comes, you know that it is key. Because one of the things they will require, they will ask is, give us your bank statement. So you can imagine if all your personal transactions are done on your business account, or if you are doing your business transaction on your personal account, you know it will be messy. And they might use it against you. Income that are not, maybe normally they are not income from your business, and you merge everything, business income, you merge with your maybe personal income and all that, you know, they will just get at you and say, they will take everything as if it's an income to you. So bank statement is key. Then contracts and agreements, all these documents are necessary. Asset register. Yes, then let us not say, oh, I'm just starting. You bought that system, you did not record you did not register it to your asset register, because asset register are meant to record your fixed assets item. Oh, I bought computer, I bought even if you have a car that you are using for your business, register it inside your fixed asset. And it is that fixed asset that you would use to compute your depreciation, which is allowed as capital allowance under taxation. So no matter how small your assets is that you are using for your business, ensure you register it. Then trial balance and general ledger. So I wouldn't want to disturb us on this. You know, these are books of accounts. So, and I like that this webinar will be as practicable and as simple as possible. So yes, it is good trial balance and general ledger, but if we don't really know how to keep it, we can always, those ones are things that maybe professionals will have to be keeping for you, or maybe when you have an accountant. Then we have audited financial statements. Here for companies, you know, that as their turnover is more than 25 million, they need audited financial statement. But if your company, your turnover in the year is not to 25 million, you don't really need an audited financial. You need a financial statement, but it is not compulsory that it should be audited or certified by an accountant. Then annual returns to CAC is also key. VAT and withholding tax schedules. So if you are selling items that has to do with VAT, that has to do with withholding, you need to keep schedules for it. So withholding now, yes, maybe you even you transact with another company or another business or another individual or another company, and they withheld your tax. Note it and ensure, follow up, make sure that they pay those taxes, because it will later count for you. Withholding tax, there are credit note that should count for you to reduce your tax burden at the end of the day. Now, what are the compliance requirements and deadlines? So I just pick points that I believe would help our business, will help us as founders to ensure that we are compliant with taxes and we don't have issue with tax authorities. So what are the compliance requirements and deadlines? Now, the first one is the first type of tax here, which has to do with personal income tax. As I mentioned, there are taxes that are paid by self-employed people, sole proprietors. So these are taxes that are paid by people that register their business as you use business name to register your business. So if your company or your business is under, you are registered as with a business name, you'll be paying personal income tax. And compliance requirement is that you do annual tax return submission. You are required that before 31st of March every year, you file, that is 31st of March of another year, you file your returns for the previous year. So I'm saying that if you want to file for last year, it is the only line on you that by before 31st of this year, you would have filed the returns. I mean your taxes for last year, you would have filed it before 31st. So, and the statutory deadline is before 31st of March annually. You must have filed. If you don't file by then, if you file later, your filing your returns might attract penalty and interest based on the law. Then payee, this has to do with people that has staffs that are working for them. And I would say if you have more than 5 staff that are working for you, and you are paying them an amount that is higher than minimum wage, try to bring them into tax net. It will save you, because at the end of the day, if you are not paying, if you are not bringing them in, and tax authority discover, they will bill you and you have to pay for it. Even if the staffs are no longer working with you, they will charge you, because they expect that for every staff that are working with you, you deduct pay as you earn from their taxes and remit to tax authority. And this is supposed to be a monthly affair. Before the 10th day of the following month, you should have filed for them. That is, you submit schedules for their payee and you remit that payee. We call it pay as you earn. So if you now, let's not say you did not register, you don't have, your own company is not by business name, but you register as a company, then you need to pay company income tax, which is supposed to be audited. But I mentioned that it depends on the size of your business, and that is another advantage from Company Income Tax Act and the regulation, the Finance Act of 2020, that says that a company that has a turnover less than 25 million is not expected to pay CIT. So, but even if you are not paying, you are supposed to still file. There is what we call new filing. File it. Tell them what you have done. Let them know this is what you have made. It's not up to what they are supposed to charge you for. File it like that. So, and this is supposed to be filed within 6 months after financial year. No, another thing is value-added tax, and this has to do with if your products or your items are vatable. They are vatable items. So, if they are vatable items, that means you also have to file for monthly VAT returns. You have to do your monthly VAT returns, submit to FIRS, and this is supposed to be done before 24th day of the following month. Then we have withholding tax. You deduct at source. This is deducted at source, and this also depends on what you are doing. their items that withholding tax, but their items that withholding tax will also not apply. So it depends on the products or the services that you engage in. Then another thing I think you also benefit from is the withholding tax regulation of 2024 that commenced fully for usage January 2025, where for everybody that is rendering services, you are supplying, rendering services, items like that, their withholding tax have been reduced from 5% to 2%. So that means if you render service or you supply in another business or another individual or another company, and they withhold your VAT more than, if the VAT, if the tax they are withholding is more than 2%, you have the right to challenge them because it has reduced. But if you are also withholding for others, because withholding tax could be in two ways. If you are supplying, they can withhold. If someone's also, maybe let's say you also have people that supply you maybe raw materials, maybe items, and you are also withholding their taxes, then that tax, which is normally from their payment, should be remitted for them before 21st of the following month. So you deduct and you remit. I hope I'm communicating, and I hope you are learning from this webinar. So I move to tips to handle tax audits. Okay, let's now say, I have not been doing, or I have even been doing what I'm supposed to do, but tax agency came, called tax agencies asked or required that I will be audited. Let's say you needed to be audited, or they want to audit your business. So what you need to understand here is tax authorities, they have the right to audit your business, but most times it is your activities, your reactions to tax compliance, them coming for tax audits. And so there are things that can instigate tax audits, but I'm not going to that tonight. Let me just tell you, let's say you even want to go to tax audits, maybe from either state or FRS. What are you supposed to do? Number one thing is understand the type of audits they want to do. Is it a desk audit? Are they going to do it at their office? They ask you to bring your documents or send documents to them. Is it a field audit? Are they coming to your site? Or is it an investigative audit? You have the right to ask what type of audits, and I believe they would have even communicated, that would have been communicated through their letter. So then emphasis also is on keeping complete, organized, and up-to-date financial records. This cannot be overemphasized. You really need to keep records. It is key to management of your taxes. You need to keep record, and will also help you even if they come around for audit. It will help. Then avoid cash only transactions that lack verifiable documentation. Yes, I know, because it also has also happened to me. Because we are startups, because we are just, we some things we want to get for our business, we want to do for our company, we just use cash, and go and do it, and there won't be documentation, and you, in such instance, you want to claim that expenses you have made on behalf of your business, but they get your bank statement, they did not see that you paid. Let's say maybe you even paid as much as 400,000, 500,000, but you did not see it through it didn't go through your bank statement, because tax authority will work with evidence. So let's avoid cash only transactions. Let's, as much as possible, ensure that most of our transactions pass through our bank. Yes, this will help us to have be able to, from even at any time, you can always still go back to it and present that. Then check your tax compliance status ahead of the audit and settle any outstanding liabilities or late filing. So before they come around, ensure that you have also done due diligence. Ensure you do due diligence. Ensure your records are up to date. Ensure you have settled all liabilities, and ensure that you have followed due process. This will really help. They respond promptly, accurately, and transparently to audit queries if there is anything like that. They know your right during the audit, request for scope clarification, fair hearing. As taxpayers, you also have rights. You also have rights, and most times it's because people don't know they have rights. That is why some so-called tax consultants or even some agency used to they think they can, they can just maybe treat you or just react to you anyhow. You have your own rights too. So you have right to request for scope clarification. You have right to fair hearing, for them to hear you out, to explain, to give them details and all that. You have right to appeal on fair assessment. Let's say you have assessments that are not realistic. You have rights. And that is why we also have tax appeal tribunal. They regularly conduct internal reviews to stay prepared and reduce all these risks in the future. Ensure that within you have done the right thing. Review your tax compliance, see where you are lacking, see where you are, and ensure you do the needful. This will really help. Then, when necessary too, you can also involve a tax professional. Now, because of our time, I would just take this question. There are frequently asked questions that personally I know that a lot of founders have asked me, and might also resonate with some of us too. Might be what we are also passing through, or what we have also encountered in the course of our business. So I like to give us hints onto how to handle all this. Do I need to register for VAT? Yes and no. It depends on your business structure. So it's not a straightforward answer. It depends on your business structure, and it also depends on your products, what you are doing. Are you into products and services that are valuable? So all these are things we need to answer. But to just give a straightforward answer, if for VAT, you need to register. I would advise that you register for VAT, and that you do with Federal Inland Revenue Service. Now, let's now say you don't even have a VATable, you are not dealing with VATable items. You can always file new VAT returns. They will know. You just list what you have done for the month in terms of sales you have made, list your expenses, and from your activity, even from your business definition or your company definition, they will know that your products or services are not VATable. Then, if your company too, normally by the law, if your company, if you are not also having a turnover up to 25 million, you are not even supposed to register for VAT. But I would say, because all of us are also praying for growth, it's good that you register, so that even when you surpass that 25 million, your mind will be at rest. You'll be at rest because you have followed the right process and you have done the right thing. Then what about PIT? PIT, personal income tax, I've mentioned that. Pay as you earn. So PIT and pay, personal pay as you earn, they are taxes that are collected by states. So they are taxes that you pay to states. So am I supposed to register for that? Yes. So that is why after you are done with registering your business with CAC, ensure you get your thing. And I even know that before you finalize your registration with CAC, there is this aspect of you registering for your thing. There is to request for your tax identification number too. So with that, you would have been in the tax net. So all you just have to do is show up to register that you are liable to pay PIT. Then company income tax, which is a tax that is collectible by federal, you register with FRS. Then withholding taxes depends on your, do you have a business name? If it's a business name, you pay withholding to states. If it's a company, if your own business as a company, you register as a company, you pay to Federal Inland Revenue Service. So what if I miss a deadline? Yes, this is also another question that most funders, oh, deadlines for filing returns, maybe the monthly deadlines, maybe the annual returns, you miss the deadlines. Yes, it is not advisable, I would say, as much as possible, that you keep calendars for all those deadlines so that you don't miss it. Because for if you miss deadlines, it attracts, based on tax laws, your returns, you'll be charged penalties and interest, you'll be fined. So that's why it's not good. But if you now, let's say eventually you missed a deadline, that does not mean that you should still not file. Do the need to file your returns. So if you have a genuine case for missing the deadline, you might also write to let them know these are reasons why you have missed the deadline. But if you don't really have it, just ensure you file. Then let's say, oh, they now slam you with penalties. You can also appeal for it to be waived. That's what we call, you can appeal for waiver of penalty. So then how should I handle the huge tax liability recently assessed against me? Oh, this is another issue that funders face. And most of the time, funders get what we call BOJ from tax authority, best of judgment assessment. They assess them based on the best of their judgment, because most times tax authority also used to experience funders not filing, and they want to collect. So what they will do is, just based on their own assessment, they will just feel because maybe you have they feel, oh, you should be able to make 30 million in a year, and they will just slam you each, maybe PIT, or they will even slam you company income tax that are more than. So if you have cases like this, if you have experienced it, there is how you can undo it. And the first thing is, ensure that you object. There's what we call objection. If you slam you with huge tax liability, you can object immediately just by writing. Write and object that, oh, you have asked me, that you have sent your notice of assessment that my liability is 5 billion. But with what I have done, my liability is not supposed to be more than 1 million. Just put that in writing, let them know, and put evidence. These are the sales I made in the year. These are the revenue I generated. These are my expenses. And calculate your tax. And by then too, I believe you should have paid so that your tax. And if you have not paid, you are also meant to pay and attach all your evidence and send to them. So, but this must be done within 30 days. Objection can only be valid if you do it in writing. And we also have, at least some of our IRS, state IRS are also automated now. They have platform where you can send your objection. So either you are doing online or physically, ensure you do that within 30 days so that it will be valid and treated. Because based on law, if you don't do that, after 30 days, whatsoever they slam you will become binding. They call it is now binding. So it will become binding, and you might not be able to do anything to it. Another question is, we also have people being confused about what is the difference. Why do we have to register with FRST? We'll still register JTBT. We'll still say come and register. Normally, we are not supposed to be having different tax identification number. And that was why both FRS and state IRS were merged, and they have representative in JTB. And that was why they also started Joint Tax Board Tax Identification Number. It's a unique, unifying identity number that is supposed to be for both FRS and state. So normally FRS is not supposed to issue another thing to you. They're not supposed to have another thing from state. But, well, for some reasons, maybe based for that is known to them too, some of them still have their own unique identifier. But the one that is really key is this joint tax board thing, because it's the one that unifies both FRS and state IRS. But like I said, you still have some states. I know that Kwara still have CRIM, that Lagos still have their own, even Oyo. So you still have some states that still have their own identification number that they issue to taxpayers. So must I register for all these? It is normally is not, you are not supposed to be registering for all these uh, identification number. The only one that is key is that joint household, is the one that is supposed to unify. Either you want to pay to FRS, because all these, the states, the Federal Revenue Service, all of them have been merged into that system to ensure that they capture your data at once, and those data will be used by both parties. So normally, like I said, it is not, you are not supposed to register for all the three. But if peradventure in the process of your registration, your state still require that you you get their own number, I think you still have to do that. Although some states too, they like to do that to ensure that they have their own, but they can always have those database from JTB. But normally, it's just supposed to be a one identifier from JTB. So, and that is why you see people, they will have the FRS thing, they will have, and some people are even confused. They're supposed to just have one thing. That's, and I know that those bodies too, I think they are working towards ensuring that it is just one, but I don't think they are there yet, because I still know there are some states that they will still insist you have their own identifier. So aside that question, I don't know if there is opportunity to ask questions. I would love to take that the next few minutes. So thank you. I appreciate your time.
Thank you.
I appreciate
thank you so
your
much.
presence here.
Thank you so much. We are so grateful. We really enjoyed. Personally, I was jotting on my phone and I have so much. But first of all, we have some questions in the comment section before I go ahead to ask my own questions. So the first question is asking an established publishing company sent me a manuscript for editing because their editors were swamped. I am a freelancer. I was surprised when they deducted 7.5% as tax. Was this right?
Normally, you are a freelancer. Normally, or from your own business as a freelancer, you yourself, you cannot pay VAT on your own. But there's what we call vatable. There are list of vatable items. So editing, all these works, they are under, categorize them under services that have to do with, you are being paid a fee, a commission, and like that. So all those services are vatable items. So, and you know, value-added tax are tax that are being charged. You are being charged for the value you have added. That value you have added, they will charge VAT on it. So you are liable. That they are charged 7.5 on your payment is in order, because that company will not charge VAT if the company is not meant, if they are not under the categories of people that are supposed to pay value-added tax. But because I want to believe the companies are companies that maybe their turnover is more than 25 million, then with that, definitely they need to charge VAT on their either their supplier, their contractors and consultants. They need to charge VAT, and that is why, so that they charge you VAT 7.5%, it's in order.
Okay, so I want to ask a follow-up question. Now, how are we sure that they are remitting it when they are deducting it? How are we sure that they're not eating that money? What's the evidence? What are we supposed to ask them? Like, is there a way we can say, oh, I want to know, did you remit my VAT? Or are you eating my money?
I think I need to add something on that VAT.
Okay.
VAT are meant to be borne by the person that enjoyed that service. I think I need to also make that clear. So if the VAT they are charging is being deducted from your own fee, it is wrong. Hello? Because they are the one enjoying that service. Yeah, because they are the one enjoying that service, they are supposed to be the one that will bear that value added tax.
So is that why when we go to supermarkets and we buy their products, they had VAT to our fees that we are paying
because you are the one enjoying that products.
So obviously it was that company that was supposed to pay, not us, because they're the one enjoying the service.
That's correct. Yes, that's correct.
So that's
so they're supposed to gross up. They are supposed to gross up the amount that they are from their invoice. It's supposed to be a gross up figure. They are supposed to have that 7.5 to whatever has been that's supposed to be paid. Then they will withhold it and remit.
They're not supposed to be deducting it.
No.
From our own fees.
No.
Okay. Now, the freelancer is also asking, for a strictly service-based business, can you add VAT to your invoice, just the way product business, supermarkets, and others add VAT? So now, as a freelancer,
yes,
as you know, someone that who does services, okay.
For individuals that are not registered as business, you can't do that because you cannot even remit the VAT. You are not registered as a business owner, either business name or company. You can't do that. But if you have a business, either business name or company, and your turnover, you are emphasizing, or you from even your experience, you know that you have a turnover that is more than 25 million, then you are supposed to add VAT on your invoice. Ensure that you had VAT for the person that wants to enjoy that service to pay you. They will pay. It's now in two ways. It's in two ways. Sometimes some people had, when you had VAT, some people would pay you your fee with all the VAT, just as the madam that asked question, the lady that asked question. They will pay you your fee, they will withhold the VAT and remit. And for some other people, they will pay both VAT, they will pay the VAT and your fee, they will pay it together, expecting that you are going to deduct and pay. So
if pay your fee together with the VAT, expecting that you are
VAT, you will
remit and then pay.
Yes. Yes.
I see.
Yes. So
I see.
Either way, but most times when
okay.
Go ahead.
So the question is similar to this situation too. So for services that deduct withholding tax, how are we sure that they remit? What are the evidence that we should ask for when, for instance, I'm a legal practitioner, I work for a company, and then the company is giving me, the company is telling me they've deducted withholding tax. So what are the evidences that, okay, because this thing you said, it can give me tax, it can reduce my taxes when I'm filing. So what are the evidence they are going to give me for me to be able to present when I'm doing my tax returns to reduce my fees if they've deducted my withholding tax?
Okay, based on withholding tax regulation 2024 that commenced fully for usage and 1st of January 2025, every company that withhold your tax are supposed to give you tax receipt. There's a template that has been designed. There's a template that has been designed for them that they will issue that receipt to you to show that your the withholding you have the tax you have withheld from your payment has been remitted. So either they even remit or they don't remit. It's a right to ask. You have deducted my pay. Give me the evidence. So if at the end of the day you don't remit, you can use that evidence with, it depends, either states or FRS to show that they have deducted my, because they need the FRS, the tax authorities, so that they will be able to also monitor people that will withhold people tax and not remit. So once you have that evidence with you, the company certifying that we have withhold your tax indeed, you can always present it as part of your evidence to tax authorities. So if they don't remit, tax authority will be the one to now go after those companies,
after them,
to ensure that the debts.
Yes, thank you.
Yes.
So I have a question. So you were talking about payee, and you were saying companies should remit payee for their staff once the fee is above minimum wage. Now, the question I want to ask is, Li Harris, Lagos State Inland Revenue, sent a mail to someone stating that she had not filed her returns, her tax returns, and this was an employee. The company apparently had been paying her salary, then at some point the company laid them off, and she has been out of job for about a year. But Li Harris kept on sending after the company had already paid, they were still asking her to file tax returns. Hello?
Oh, come again with that question. Just the last.
Can you hear me? Okay.
Hello, I can hear
I
you.
said, yes,
Can
I said
you?
after the
Yes, I can
company
hear
had
you.
already paid
Please.
payee for her, Li Harris, Lagos Inland Revenue, Lagos State Inland Revenue was still
Okay.
asking her to file, tax returns. Like they've already paid. So from the mail she forwarded to me, I saw that the filing of the returns is different from the company making payments, something like that. Then the second thing is, after she was already out of job, they were expecting her to keep filing the returns, the tax returns. So please, can you clarify that? Does it mean that even after my company has already paid payee on my behalf as a staff, I still have to file some paperwork? Is that what it means?
Okay, if you are to go by tax law, every employee too are supposed to file.
Okay.
Yes, the honor lies. Hello. Yes, the honor
Yes, I can
lies
hear you.
on your employer to file. The honors lie on your employer to file for you before 31st of January of the following month. That, oh, these are the pay we have deducted from our employee, and they file with the State Internal Revenue Service. But in that instance, we'll see that most times what used to happen is maybe the employer has not paid. Because once the
Mm.
employer paid, they will definitely follow the payment up with a schedule. So it is that schedule that they will use to credit each employee's account with them. But as an employee, you yourself need to file. You have to file. Your employer will file for you. Then why they also require employees to file, and that you are supposed to do even before 31st of March of the following year. So why it is required for employees to file is they also expect that, oh, maybe the income you is not just limited to salary. So if you have
Salaries.
other source of
Oh,
income,
really?
yeah. So if you have other source of income, you still will be able to also render that. So it is expected, but you see that most times employee don't file, especially employee that maybe they are strictly on salary, and you will see at the end of the day those people are now the people that maybe when they now need tax clearance certificate, it will not be difficult to get, because when you don't even file, how will you be able to confirm that your employer is paying your payee? That is why it's also good if you are working in a structured organization, let them also give you your pay slip. From there, you will know the
Mm.
tax that has been deducted every month. You can also file with that. So when you file and they you are fine, but the people you are working with, we have not seen any of your taxes. They will be able to follow up on it. But if you also keep quiet and we don't do anything about it, because this is our right, they have deducted from our hard-earned money. So that means if they are not deducting, they are supposed to pay me fully. Let them pay me my money, let me go and remit it myself. But also firm on employers deducting paying from employee and remitting to state internal revenue service.
Wow. Thank you so much. We really appreciate you for your time. Personally, I have a whole lot jotted on my phone, and I'm sure that a lot of people have also grasped one or two things. So please, quickly, please tell us how. we can reach you. A lot of people I know, they still want to know more about you. They want to follow you on LinkedIn. They want to connect with you on social media. They probably want to reach out to you for how to proper, you said that they should get their books properly, their records. That's the foundation. They want to know the kind of books to maintain, how to maintain it, when to file, all those kind of things. So please just tell us how they can reach you and how they can connect with you.
Okay, you are still seeing my slide. You see my phone number there. Kike Lomo Oyelere. There, I also release from time to time hints on how to manage your taxes, what can help you to avoid tax penalties, interest, educating you on tax management. So on LinkedIn, Kike Lomo Oyelere. On Facebook, Kike Lomo Egbeyemi Oyelere. I also reach out from there too. So, and my phone number 07031973374. It's on the slide on the screen. Then Gmail Kiki Egbeyemi01@gmail.com. So thank you, and I like to help businesses, small business owners, founders, startups. You have issue, reach out. I'm always ready and willing to help to ensure that we don't go against the law. And peradventure, if you have issue with tax authority, you can also reach out. We also have our eyes there too that can help out, and we can also give you hints on how to resolve issues.
Thank you. So somebody said, is it true that petty traders are taxed a yearly fixed fee, a yearly fixed tax for petty traders? I think petty traders are going to be pay as is it not personal income tax? They don't have a company.
Yes,
so it's based on what they
are
make.
going to be paying personal income tax. Yes,
Based on
but
their
what happens
assessment
is
of
you
what they
see,
make.
the issue is for most states, at least I can say of Kwara State, and I think they also do that in Lagos. For all these petty traders, there is this money they have like a fixed rate. They call PIT.
Okay.
There are some they'll just ask them to pay 4,000 in a year, or especially for petty, those that are selling maybe provisions, selling small things, items. So they will just have a fixed rate that they will ask them to pay in a year. So, and some states will also have consultants that collect for them. So states are collecting directly, because for people that are carrying out such buying out activities, that of selling and all that, don't have record at all. So there's nothing to assess and all that. So they have a fixed rate that they charge these people that they pay to tax authority.
Wow. Thank you so much for your time. We appreciate you. On behalf of Abbey Legal Barristers and Solicitors, we say thank you. We say we love you. We appreciate your time. Have a good night, and please send me well to your family. Regards to your children and everybody. We really enjoyed your session. It was very enlightening.
Thank you.
I'm sure people are ready. People want to reach out to you as soon as possible. Thank you so much. Bye.
Bye. Thank you.
So thank you everybody for staying till this time. We appreciate you. So this is Abbey Legal Barristers and Solicitors, and this is one of our webinars, and this is a tax webinar. So we'll also be sharing other links, other flyers as soon as possible. So just keep an eye on our page, because we have a lot in store for you this year. So we're bringing other professionals. We are bringing professionals who are data privacy, professionals who are business structure experts, business marketing experts. Think about it. Everything you need for your company, Abbey Legal is going to be bringing it for you. So keep an eye on our page. On Facebook, you can follow Abbey Legal Barristers and Solicitors, Abimo Olayiwola. On LinkedIn, you can follow Abbey Legal Barristers and Solicitors, Abimo Olayiwola. On Instagram, Abbey Legal Law Firm. Abbey Legal Law Firm. Please follow us. Even on TikTok, follow us. If you are yet to subscribe to our YouTube channel, Please subscribe right now and turn on notification, because a lot is going to happen this year, and you don't want to miss out. We have a lot in store for you. Thank you so much, everybody. Have a good night. Bye.